Your first step to wealth. It starts with a very simple idea. Imagine you want to buy a big, delicious pizza. But it is pretty expensive, and you can't afford it alone. You don't have enough on your own. So what do? You call your friends. Each friend puts in a little money. Together, you can buy the whole pizza and everyone gets a slice. The size of your slice depends on how much you contributed. A mutual fund works the same way. A large pool collected from many people. We are all investors who want our money to grow. This pool is then invested in different places, stocks, bonds, and more. A professional fund manager actively manages these investments for a fee. You buy a piece of a diversified portfolio, not a single stock. Diversification spreads risk and makes investing accessible and affordable. For many years, the average Indian investor had limited choices. Options were fixed deposits, post office schemes, real estate, or gold. But times are changing. Inflation erodes purchasing power. To beat inflation, money needs to work harder than bank FDs typically do. Mutual funds can potentially deliver higher long-term returns that beat inflation. Accessibility through apps has opened investing to millions of Indians. You can start with as little as 500 rupees. This low barrier, plus smartphone penetration, has driven adoption. Professional fund management lets busy people access top-tier expertise without doing the heavy research themselves. Most of us lack time to track companies. Mutual funds solve that. Mutual funds align with specific goals: education, a house, travel, or retirement. They are flexible for short or long horizons, matching many Indian families' needs. Imagine walking into a large restaurant with a massive buffet. There are starters, main courses, and desserts, many choices. Similarly, mutual funds come in many varieties. Broadly, funds are grouped by where they invest: equity, debt, or hybrid. Equity funds invest primarily in stocks. They can deliver high returns but with higher risk. They suit long-term goals like retirement. Debt funds invest in fixed-income instruments, loans to governments, banks, or corporates. They are typically less volatile and suitable for short to medium-term goals. Hybrid funds mix equity and debt to balance growth with stability. Some hybrids are equity-oriented, others are debt-oriented. Choose based on risk appetite. Index funds passively track indices like the Nifty or Sensex and usually have low fees. There are also solution-oriented funds for specific goals, often with lock-in periods. Let's break down the journey of your money after you invest in a mutual fund. It is a regulated and systematic process overseen by SEBI. Money flows from investors to an AMC. A fund manager invests it into stocks, bonds, and the NAV is calculated daily. You and thousands of other investors contribute to the scheme's corpus. You buy units of the scheme. The unit price is called the net asset value, or NAV. For example, 10,000 investors putting in Rs 10,000 each creates a corpus to manage. The fund manager invests according to the fund's objective, buying shares like Infosys, HDFC Bank, or bonds for debt funds. Market prices change daily. At day end, AMCs calculate total market value, subtract expenses, and divide by total units to get the NAV. That is why NAV moves every day. You profit when NAV rises from buy to sell. If you invest Rs 10,000 at NAV Rs 100, you get 100 units. If NAV becomes Rs 120, your 100 units are worth Rs 12,000, a Rs 2,000 gain. When you redeem, the AMC sells holdings to return your money. Redemption is regulated and seamless. Starting may seem daunting, but it is simpler than ordering a phone. First, complete KYC. You need PAN, address proof like Aadhaar, and a photo. Many apps offer video KYC that finishes in minutes. Once verified, you can invest anywhere. Choose a platform, an AMC website like SBI or apps like Groww, Zerodha Coin, or Kuvera. Search the fund you want, for example, a Nifty 50 index fund, and compare options and expense ratios. Select the fund and tap Invest Now. Choose lump sum, say Rs 5,000, or start a SIP. Then link your bank for payments. Provide account number and IFSC. Linking is one-time and secure. Pay via net banking or UPI. After payment, units are allotted at prevailing NAV in a few days. You'll see the investment and its value on the app. Congratulations, you are now a mutual fund investor. A powerful feature in India is the Systematic Investment Plan, or SIP. Think of it as a recurring deposit for mutual funds, but with better return potential. You invest a fixed amount at regular intervals, usually monthly, on a chosen date. SIP uses rupee cost averaging. You buy more units when the market is down and fewer when it is up. Approve a one-time e-mandate to auto-debit the SIP. The process is automated and disciplined. You can stay calm. SIP removes market timing stress and builds habit. Compounding is interest on interest. Returns are reinvested and grow into a snowball over years. A small SIP of Rs5,000 a month can grow into a large corpus over 15-20 years. Setting up SIP is easy. Choose fund, amount, date, approve e-mandate, and you're on autopilot. Small, consistent steps compound into big results. Start small, stay consistent. Is my money safe in a mutual fund? What if the AMC misuses money? Valid concern, but the system is structured to prevent that. SEBI, India's market regulator, enforces strict rules for AMCs. Funds are held by a custodian, monitored by trustees. The AMC cannot simply use investor money. SEBI mandates daily NAV disclosure, monthly portfolio reports, and fee transparency. Rules require diversification and risk disclosures to protect investors. First, start early. Small amounts grow via compounding. Second, be patient. Equity tends to reward over 7+ years. Do not panic sell. Downturns are opportunities to buy more units. Align funds to goals. Short-term goals may need debt funds. Long-term goals may fit equity. Diversify across a few good funds. Don't put everything in one place. Investing is a marathon, not a sprint. Take the first small step today. Start an SIP.